Hello everybody, welcome back to this episode of the basic concept. Today is episode 20 and yeah, I know it's been long, but today hopefully I'm gonna finish it. It's been a rough journey for this playlist, but I think and if I thought it could be useful for maybe people that are starting again or want to deepen their knowledge on some topics. And today, as you've seen by the title, we're gonna speak about new week opening gaps and new day opening gaps. So starting with the first, if we go, okay, today is Sunday, but if we go and you see this gap here, this is the new week opening gap. So every time we have markets are open Monday to Friday, when it opens again on Monday, price sometimes can create some sort of gap, okay? So there is a gap in price. You can see here, okay? So you can see here an hourly, this is the open, okay, this is the open close. So from the close of the last candle of Friday till the open of the first candle of Monday. So you can see here that this is the close. So it's a bearish candle, so the close is here, is not up. So this is your gap, okay? So price had a gap from here, 24,190 to 24,540. It's a big gap. It's a big gap. And what does price a lot of times? Price always refers to it, okay? Especially to the midpoint. You can also divide in all the quartiles. So you can also divide it. You can see here, this is not perfect quartile, but it's right around here, which is perfect actually. If I change the options, 0. I can put it 0.75. So okay, you can see this quartile is perfectly respected again here and there. Okay, so when you have this big of gaps, you can use your Fibonacci tool to kind of divide it in 4 parts, and also you can use optimal trade entry, which is 0.62. You can see almost gets it perfectly. Okay, so a lot of times Monday could be again here expansion, then Tuesday comes back to it. So it's kind of the same as a new day opening gap. You can kind of feel that there is a lot of probability. Usually it's like for new day opening gap, 70% of the time price refers to the midpoint. I don't know exactly the percentage, the backtested percentage of the new week opening gap, because there you have way less new week opening gaps, new day opening gaps. But again, you can kind of see that price refers many times to it, and if it doesn't refer to it immediately in the week prior, it can refer it after. It can refer in a bear market if we display convincingly higher. But again, they get referred to after a lot of times, most of the times. And so what happened here this week? Monday displays up, and then Tuesday went exactly to it. You can see here that the bodies here in the hourly close above it. So we're like, okay, the wick does the damage, so the wick touches this first quartile, okay? But the bodies are closing below. So again, Wednesday and Thursday was up again. And then we left this big wick that we wanted to take. And then we left this low. This was all hourly and 4-hour low, daily low. And so it was a very good point in price to go back to it if you want after to displace and to go to back to all-time highs. So price, again, wanted to go one more time here. I wish we could have gotten the midpoint here, okay? So a little deeper retracement, but in this case, we just took the low and we completely reversed, okay? So you can see that lows also inside of new week opening gaps, or it could be higher new, so it can be very useful. You can treat it more as a higher time for confirmation, okay? So if we are maybe inside of the new week opening, so like if price did something like this, so went back and stayed here, then it's not the best. I will say it's not the best because you're inside of it, and so you can have not that many of a target be otherwise than the midpoint fill or the full fill of the new week opening up. So again, you can see as new week opening up as a bounce or as to fill it, but if you're like trading inside of it, I will say it's not the best. If we move on then to the new day opening gap, so same thing for the new day opening gap. Basically you go to regular trading hours, You can do whatever chart, maybe in the 1 minute it's more precise. And you can see that we just have all the New York session, okay? We just have New York AM, New York lunch, New York PM. We don't have Asia and London. That's because they're counted as a gap. So if Asia and London displays higher, then New York will open above New York PM of the day before. So we're gonna have a gap. Again, you can see, to be more precise, you can see the open. So the close, sorry, of both prices of the last candle of PM and the first candle of New York AM. And I put it transparent because, again, I want to see the midpoint gets touched, or you can also use the upper quadrant, the lower quadrant, or you can also divide again in quartiles. It's not necessary, I think, but again, it can be useful. So for the new day opening gap, there is a 70% likelihood that in the first 30 minutes, price fills the midpoint. In this case, it didn't. You can go a lot of time and back test it. In this case, we had you can have big or small new day opening gap. In this case, we have like here, and you can see the price immediately. So we gap up, and you can see the price immediately fills it. But when there is a small gap, new day opening gap, I would say it's not that important. You can, a lot of times there's also not that many. Also here, you can see it's like small gap, but immediately gets filled. So when the gaps are very small, okay, new day opening gaps are small, they are very likely to get filled immediately, okay, as it happened for Wednesday, as it happened for this Thursday. Yeah, Wednesday and Thursday happened perfectly. When we have big gaps, then okay, this one was very huge, but like when you have like medium or big, you can kind of use the midpoint as a target, or you can also use the upper part of the new day opening gap as maybe a price, as a level where price could rebalance off. And this case kind of did. So yes, we almost took the New York low, but we kind of respected here. We hung around the first percent, and then we decided to displace all-time high, create new all-time highs. But yeah, that was basically it. So you can use them as an added confluence, of course. You can use them as point of reference. They're not that important, I think. Sometimes they are, sometimes they're not. Especially if you have a small new day opening gap, you can kind of just not care about it. But you can just draw it and just be careful about the levels that it creates. And if you have a bigger or medium, then you can use it sometimes as a target. And the midpoint and consequent encroachment, whatever you want to call it, can be a point where price could react or bounce off. And for the new week opening gap, they don't create always. They can be big or small. In this case of this week was important. Price reference to it 2 times, and the second time was to take the low inside of a gap. So it basically functioned as a gap. I think it could be a little bit more powerful. But yeah, in this case here, work was perfectly because we put in a low inside of it, and then we respect the first quartile, and then we come back to take the low, respect again, and then go up again to all-time highs. Yes, for all-time highs. For Nasdaq, Bitcoin is lagging behind. It's fine. That's life. But yeah, I hope that this video was useful, and I'll probably see you in the next one. Peace.